it's all about optimal capital. It's not enough just to get approved for financing and credit. You have to get optimal finance. We have to get you the most money at the best terms. And there's a recipe to this. And that's exactly what I want to teach you today is the 5 ways to negotiate the best terms on the financing you get. Look, it's a big deal. The longer term, the lower the interest rate, the more money you're able to borrow and afford to borrow. The first loan I ever got was $75,000. My payment was over $9,000 a month. Then I got $325,000 and my payment was only $4,600 a month. So how do I cut my payment in half and get an extra $250,000 in financing? It's knowing these 5 things right now. You're going to leave this training knowing a handful of things you can do to be able to negotiate better terms or even get better terms right from the get-go, right from the beginning. We got a lot to cover, so let's dive in. So number 1, you want to come prepared. You want to legitimately know what your strengths are, and you need to legitimately know what your weaknesses are. So you want to make sure you check your business credit. You want to make sure that you check your consumer credit, and you want to make sure that you have a look at your financials. Depending on the kind of financing you're applying for, you probably want to have those financials ready to go. Here's what I mean by that. An SBA loan is going to require a balance sheet, a P&L. But yet revenue lending and merchant cash advances only want bank statements. So it's a good idea to have a folder on your desktop of your computer that you keep all up-to-date financials in. The last 3 years of your business tax returns, the last 3 years of your personal tax returns, the most recent 6 months bank statements, most recent 6 months merchant statements. So when we get a new bank statement or a new merchant statement, my accountant sends it to me. And then I put it in the folder and replace the oldest one there, for example. Get a P&L every quarter. The P&L from last year, all those kind of things will be there. The more prepared you are, the faster the loan is going to go. So many people ask me how long it takes to get a loan. And my answer is always the same. That depends on you. You are the one that will slow down the loan because you don't have what they need ready when they're actually asking for it. So be prepared. Have those financials prepared. Know what your consumer credit's like. Know what your commercial credit's like. And know what your strengths and weaknesses are. I personally like to write a letter of explanation for any loan that I apply for. And I come right out the gate in the letter of explanation and say, hey, appreciate you considering me for this loan. Here's some reasons you might not approve me. See, this is the opposite of what most people do. Most people try to hide from lenders what they don't want them to know. But the lenders are going to know it. And you look suspect, as my daughter would say, you look sus when you try to hide stuff. So you want to make sure that you don't hide it. I like to go right in with a letter of explanation and say, hey, you may notice I had this on my credit report. My credit scores aren't good. This happened, this happened, this happened. I address the negative. Then I explain, here's why it happened. And that I take ownership, I take accountability, and here's why I'm better now than I was at whatever caused that negative thing to occur. Then I go right into the strengths, okay? And these are called in lending compensating factors. And by the way, Mike South is in the house from St. Louis. Thanks for coming in, Mike. Give me your company names here in the chat. I'm going to give you a shout out on the live stream. It's like free advertising. Thousands of people will see it. Okay, so you need to make sure that you are prepared, that you have the financials prepared, that you provide the letter of explanation. The letter of explanation, the negative things that they're going to know anyways, okay? What you learned, you take ownership. Then the positive things on why they should lend you money. Hey, I've got a couple things from years ago on my personal credit report. Here's what happened. Okay, you'll notice that my credit's been good since, and also notice that I have a well-established business credit profile and score where I've never been late. So my business has a history of perfectly paying its bills on time. That's an example of a compensating factor. And lenders use this all the time. They look at a negative, they look at the positive. So you want to come out the gate and they want to see you as honest and reliable because you're telling them the truth. And then you're pointing out things they might not notice on the actual positive side of things on that letter of explanation. Always submit one. You're just not going to lose submitting a letter of explanation. The other thing is know the rates, know the terms for what you're applying for. You should have a general idea in this preparation stage of the kind of funding you're going to qualify for. There's 3 types. Funding that's based on cash flow, funding that's based on credit, funding that's based on collateral. It's going to be usually one of those types of funding or like an SBA that looks at multiple of those different aspects of you and your business. So know what kind of money you're going to go to get and then do some research. What are the best lenders that actually cater to your industry? Okay, which one? What is the typical interest rate? Get an idea of that before you go in. It's like buying a car, right? If I go in to buy a car, like I just bought a car for my son months ago, him and I went in and I was prepared. I knew the values. I did the research and I actually looked and we were one of the lowest price for that year in the country. There was only one lower than us in the entire country. So when I went in and asked for $500 off, the manager came out and said, we can't do that. We're already priced good. I said, okay, I'm good with that. He walked away. I looked at my son. I said, I know he's good. I already looked. I know he's one of the lowest, or I would have beat him up if he wasn't. But since I knew he was the lowest, then he's right. I'm getting a good deal. But I still went in and asked for it because that's the other lesson I want to teach my son. You never know unless you ask. You always want to ask. But I knew going in that we already had a good deal or we wouldn't have been there to begin with. It's the same thing here. You should know what kind of deal you're getting before you walk in. So many people ask, what's the interest rate? But they don't know what to compare it to. They don't have any idea. Then they feel it out, whether it feels high or it feels low. Business funding varies greatly based on the type of funding you're going to get. So have an idea of the kind of funding you're applying to get. Have an idea that that lender could be one of the best lenders for you, and have an idea of what rates and terms are for that kind of product before you apply. Again, we can help you with all of that, or you can even go to ChatGPT to give you a little bit of research on that as well. Number 2, build a relationship. Look, have you ever heard of funding stacking? Funding stacking is where you can walk into a bank and another bank and another bank and open accounts, right? Then what you're going to do is you're going to go get funding from all of those banks at exactly the same time. And then you're more inclined to get approved with some of them, and some of them might not approve you. But when you do get approved with some of them, then you're stacking funding with multiple different lending institutions, and you'll get way more money than you would get on your own. This is similar to credit card stacking, where you're actually hiring a funding company to get you multiple credit cards at one time, typically getting you 5 times the amount of money that you would have got if you only tried to go get a credit card on your own. So funding stacking, the premise is with funding stacking is that you're going out and opening up accounts with all types of banks. You should at least have 3 to 5 major national banks. Bank of America, Chase, you get the idea. Then you should have 3 to 5 regional banks. Bank of Tampa is one in my backyard, right? A regional bank are like banks right here in your local area. They're unique to your area. I guarantee you don't have a Bank of Tampa in your area, city, or state unless you're here down here with me in Tampa. Okay. Then we have credit unions, right? And credit unions are some of the best sources to get money with. So you want to make sure that you have 3 to 5 accounts with maybe each one of those. If you don't want to do it, you don't have to do it. I'm just teaching you funding stacking. And this allows us to then have 6 months of seasoning. We put some money in the accounts. We might move some money in and out of our accounts with all those banks. Is it a little bit of work? Yeah. But we're showing banks that we have activity, that we're using these accounts. Then when it comes time to apply for credit financing, we might want to walk into every one of those banks at exactly the same time to apply. The inquiries from the others won't affect us if we do this. And this helps us get considerably more money than we'd ever get on our own. Okay. The other year, 2 years ago, I was running with the Bulls with a good friend of mine, Brandon, and he was talking about this. This is one of the things he's an expert at. And he said that on average, his clients are getting about $360,000 every 6 months using this strategy. And a lot of the strategy I just taught you without having to pay tens of thousands of dollars to get it, right? So again, this is something that can get you $500,000 or $1 million or more just because you have established a relationship with multiple different banks. So make sure you establish a relationship and really know your bankers. That helps as well. Going in and having a banker that you know, like, and trust every time you talk to when you go in makes a big deal. It's a big deal. Okay. My son just got his first job. So we opened a bank account with Regions. I walk in there. Everyone knows me. I know my bankers. And it helps me get concessions and get some special things whenever I need it when I'm applying for loans. So open up bank accounts with multiple banks and build relationships with those banks and know your bankers. This is another way to be able to get favorable terms because they can go to bat for you if you don't get the terms you actually want to get. That brings me to tip number 3, explore your options. Don't take the first offer. If you're applying for business revenue lending, go to 3 different lenders and get 3 different approvals, okay? Because when you do that, then you have something to compare against. And even if the lender that has the best terms is the one you want, you can use them as leverage to go to the other ones to get more of what you want. I am shocked that most people do not know how easy it is to negotiate the amounts that you get. I have had I can't even count how many credit cards that they have doubled my limit just because when I got my initial approval, I told them it wasn't high enough and they doubled it. Okay, I have a Bank of America credit line. They doubled the credit line just because I told them I wasn't interested because it wasn't high enough. They asked me how much I wanted. I told them and they doubled it. Just asking gets you a long way. But again, it's easier if I can compare it. When I got that doubling of the Bank of America credit line, I said, look, I'm not interested in this. They said, why not? I said, because I already have a higher amount through Regions now, and you're giving me a lower amount. They said, how much do you have through Regions? I told them. They gave me more than that. So it's very, very good to have others you're comparing them to, because when they know they're going to lose the funding to you, to a competitor, they're more inclined to actually give you better terms. So get 3 offers, 4 offers, have some offers so that way you can go in and say, hey, I already talked to this person or this person, and here's the term they give you. One of the last loans I've actually recently got, this is exactly what I did. I came in and said, hey, you gave me this approval. Another source gave me this approval. They said, look, we can't be anywhere close to that. I said, okay, withdraw the application. And I went forward with the other source. Sometimes they can match it. Sometimes they'll beat it. Sometimes they can't, but you're never going to know unless you ask. So make sure you explore your options, get a few different approvals, then you can compare to make sure that you have the best approval. Now, as part of this number 3, it really helps to use a broker or a super broker to actually help you through the process, because they don't oftentimes cost you any money whatsoever. So let's use Credit Suite as an example, not trying to self-promote, just as an example. So we are a super broker. We fund hundreds and hundreds and hundreds of millions of dollars, right? So our lenders are more inclined to make concessions and approve our clients. I can't tell you how many times they've approved our client when they didn't approve the client directly themselves. The client went to the lender, got denied. We went to the lender and got approved. And the client's like, how did you do that? I'm like, because we have a lot of pull, because we fund a lot of business. And because we fund so much business with them, they're more inclined to make exceptions, to make concessions, to give people approvals when they typically wouldn't. So go through a broker, go through a super broker that has a lot of clout with lenders, because they can do a lot of these things for you. They can have the relationship established. They can shop around. They can do a lot of these things. It lessens the amount of work that you need to do. And that brings me to number 4, which is consider offering collateral. The best lending options that exist today are called asset-based lending. Asset-based lending is when you pledge some kind of asset as collateral for the debt. These type of financing have 1 to 5% interest rates. Even SBA loans in most cases are 8%, 10% or higher right now. But these kind of loans, you're able to get 1 to 5% interest. And all you need is some kind of asset. It doesn't even have to be your asset. It could be somebody else's. So we look at stocks, we look at bonds and 401k, IRA. We look at equipment, inventory, real estate, vehicles. Then we start looking at things we wouldn't even think we could pledge as collateral. A lease that we actually have on a property. Commodities, for example, IP, trademarks, cryptocurrency we're able to use. We can even use customer lists as leverage to be able to get financing. So if you're not getting the terms that you want to get, consider going with an asset or collateral-based type of loan product, or go back to the lender and ask him if you did provide collateral, if you could get better terms. And oftentimes they will say, absolutely yes. If you're willing to pledge collateral, you can get better terms. So look, the last SBA loan we got was like $500,000, 4% interest rate. Pretty good, right? This was like this year. Okay. And when we went into this, they asked and wanted to collateralize my personal home. And I said, no, I have account receivables. Our clients pay us on terms. Let me use those. And they absolutely did. So assets help a lot with getting you good terms. And oftentimes it doesn't have to be your house or personal assets. It can be some other kind of assets you have with a business, like IP trademark, like a business license. If you're a professional that has a professional business license, like any of those things can work and typically get you considerably better terms just by offering or looking for that kind of lending in the beginning. And that brings me to number 5, build your business credit. Look, I'm the business credit guy for a reason. Because when I started building my business credit, I had a mortgage company that had just collapsed. I had banks that cleaned out my bank accounts where I was negative. I was in the worst situation you could be in. My credit was horrible. I don't know how low it goes. I think 350. I think I was a 329 FICO. I mean, as bad as you can get. I had no money. My accounts were negative because the lenders my business lenders that I guaranteed came and cleaned out my bank accounts, right? So, and by the way, I started a credit repair business. I was like, why not? I'm going to start a high-risk business with no money and then no credit, right? And that's when I started to build business credit. And I used business credit to build that business to 7 figures and sold the business. Then I used business credit to build an 8-figure business behind it. So business credit is powerful because business credit is what lenders look at to determine if you should be approved or denied, how much money you should get, and the rates and terms you'll pay. So if you want to get more approvals, higher approval amounts, and better terms, business credit is the key. So from the moment you start your business, continue and start building business credit. Get as many accounts on there as possible, pay them on time or early, And in a lot of cases, that will carry you through just about almost any other negatives that may come up during the loan application process. But keep in mind, your personal credit's damaged, limited revenue, newer time in business. These are some major factors working against you. But if business doesn't even have a history of paying its own bills, that's an even more negative against you. But if you had those other three negatives and then your business has a credit profile with 17 accounts paid as agreed, credit lines, loans, and credit cards, then a lender is way more inclined to approve you because they can separate the problems between your personal finances and your commercial finances. But if you never separate your consumer and commercial credit report, if you never establish a history for your business, they can't separate them. They're going to judge your business based on what they find on you personally. And don't let that happen. So make sure that you are taking these 5 steps to either negotiate better terms. And Mario says, I'm under 500. Mario, it's okay. First of all, work on fixing your consumer credit. You should. Plenty of really good credit improvement companies out there that can help you. You should be focused on that. But if you have any kind of damaged personal credit, you have to establish business credit. You have to, because it offsets that negative. You can go into a lender and say, my credit's bad and here's why, and I made mistakes and here's what I learned, but I built my business credit and my business credit's excellent. My business has a perfect history of paying its bills. You need to build business credit to offset any kind of negative consumer credit. And of course, always work on fixing and improving your consumer credit as well, because it is important. And those are my 5 absolute best tips. By the way, Melissa Leak is in the house from Facebook. Awesome live information. Always fills me with knowledge. Only if you know. Thanks to you and Credit Suite team. My company name is Sell Prop Now. Sell Prop Now. I absolutely love that. Sell Prop Now. Love that name, Melissa. Thank you very much for coming in and saying hello. So let's recap these 5 tips. Tip number 1 is you need to make sure that you are coming prepared. Have your financials prepared in a folder on your desktop. Know your consumer credit. Know your commercial credit. Know the type of funding you're applying for. And that will give you some background information you're going to need before you start applying. Number 2, build a relationship. It's not bad to open up multiple bank accounts with big banks, with regional banks, and with credit unions, and apply for all of them when it comes time, unless you're going with like a fintech type of loan program like revenue lending or something like that. It's an even better idea to use a broker or a super broker, because you're not going to pay any more money in almost any of those cases, but they can use their clout and their relationships to actually help you get approved for more money. Number 3, explore your options. You should have some kind of general idea of the type of funding program that you're going to get and the type of interest rates that are common for that funding program before you ever apply. And then make sure that you shop around. Once you know I'm going to get revenue lending, well, then go to 3 lenders and apply, get 3 approvals, and then you leverage one against the other to try to get the other to come up on their approval amounts and give you better terms. Very, very, very sound strategy that works very well to get a lender to give you better terms than you primarily are initially approved for. Tip number 4, considering using some kind of collateral. If you have any kind of collateral, stocks, bonds, 401ks, IRAs, real estate, equipment, inventory, vehicles, commodities, cryptocurrency, IP, trademarks, business licenses, customer lists, this stuff could be leveraged to get financing just based on that strength. Or you could offer to pledge collateral to get even better terms on normal kind of financing you get, like SBA loans and other kind of fintech financing. And number 5, build your business credit. It's used by lenders to determine if you should be approved or denied, how much money you should get, and the rates and terms you're going to pay. So by building business credit, it's a really strong compensating factor against other things like having damaged personal credit and other things that may prohibit you from getting approved. Look, if you want to see what you can get qualified for right now, Credit Suite has over 100 different funding programs, and we work with over 1,000 different lenders, and you can find out right now at creditsuite.com/get funding. That's creditsuite.com/get funding. That's a shortcut to talk to our team. And we can talk to you about all the financing you can get now. Look, a lot of people come to us and think there's no way they can get financing. And we're getting you approved for 2 or 3 kind of financing right out the gate. So if you want to see what you can qualify for right now, it doesn't cost you anything, not even a hard inquiry on your credit report. All you have to do is go to creditsuite.com/get funding. Thanks for tuning in. Those are my 5 best tips on how to negotiate the absolute best loan terms. Don't forget to like and subscribe and keep your eye out for our next training. We're talking about more cool ways to get the money you need to start and grow